I'm going to record this session. The first lesson, we start from the price, okay? The price and then the volume, and then we compare the price and volume, okay? So here I drive some illustration. You just pay attention on these, okay? You know all the things, but just to understand these things. So we here know about the spread, okay? Okay, members, please mute the mics. When you have a question, then you can ask. Okay, when you have query, then you can ask or raise hand. I will say name, then you can ask the query. Okay, just mute your mics, then I can start the lesson. Okay, during the lesson, if you have any query, then you can ask the question or write in the chat box that I can understand you have a question, that I will say your name. Okay, then you can. Okay, now mute your mics. Abdul and Dao, you mute your mics. Okay, so we are talking on the spread. What is spread? Okay, that is a candlestick. You know all the candlestick, that that is a opening price here in the candlestick, and that is closing price. So we take the body from opening to closing. That all area is a spread. Okay, in the volume analysis, we take this body as a spread. So spread is a body of the candle which moves from one value to another value. So that is a spread. And then how much volume traded in this period? If I am talking that is a 1 minute candle. Okay, that is a 1 minute candle. Because we are trading in the binary option, I'm taking all the example on the 1 minute. If that is a 1 minute period, so we have to analyze the volume in 1 minute, how much volume, how much units traded in this period. If that bar shows that there is a volume, this type of bar shows that that is a volume, it means we have in the chart so many candles and so many these type of bars. It means each candle have a one bar, because in each period the volume is traded. Okay, so if I'm taking alone this candle and this volume bar, it shows that in this period this volume is traded. So this bar we can say that is a volume bar. Volume bar always appear in the below of the chart. These type of volume bars you will see in the chart. Some bars are low average, some bars are high average, some bars are ultra high volume. Okay, so if the bar is so much high, we can say that is an ultra high volume. If the bar is low volume, it will show that there is a low volume and below the average. So how we can take the average of the volume? If in the MT4 chart we apply the moving average, 20 moving average, okay, the 20 period of the candlestick and 20 period of the volume bars, if the bar is above the 20 period, we can say the volume is high. If the bar is below the volume, we can say the volume is low as compared to the previous candle. Okay, so here, not go in the deep here because that is another topic. I'm just going to give you understanding that all the time we will talk on the spread and the volume bar. You must recognize the candle and then the volume bar. These two things are main. When we analyze these volume analysis, we need these candles and these bars. Okay. So in this spread, It shows a body from here to here. It moves. When moves and cover the distance, the bar will increase or bar will decrease from the previous bar. So it means we compare the two previous bars or three previous bars or four previous bars or five previous bars or 20 previous bars. So we in some strategies we compare two bars, in some strategies we will compare three bars, and some strategies we will compare the 10 bars, 20 bars. Okay, when we are talking on the trend, that how much trend is going longer, so we will analyze all the bars, all the 20 periods or 14 periods bar. But if we are talking only on one or two candlestick, so we need only one or two volume bars. Okay, 1 minute after Azan, I will continue.
Hello, sir.
Yes, yes, 1 minute. Yes, brother. Now talk to me. Okay. Okay, I'm continuing now. So we was talking on the candle and the volume bar. So this analysis is the volume spread analysis. So volume bar plus this spread bar, we make an analysis, and then we can take a decision on the next candle that we can place a buy order or we can place a sell order. So here we understand this basic thing, and now there are two main things. Okay, which are the main things? The one is validate and another is anomaly. Okay, now look at the candles. I'm giving you some examples about the validation and anomaly with the spread and volume. You will find this type of candles. Maybe you will find the wicks in the candles. Just I'm drawing the bodies of the candle. Okay, you can consider the wicks also. So these types of candle, and now I'm illustrate the volume. Okay, okay. Here, look at. If this bar have this type of body, it increases and volume also increases. Volume looks like a high volume bar. So it means the bar, this candle and this volume bar validate to each other, matching to each other if the price is increasing and the volume is also increasing. Okay, when the volume increase, price increasing and volume also increasing, it indicates that that is a validate. It means the candle and the volume match to each other. that is a signal that price will continue more in the same direction. It means the next price can go in up direction. And then there is another candle, the same as the candle's size and the volume bar is increasing. Also, it indicating that it's validate the price. Okay, and then here we found the small spread bars. These are the small candles, and volume is compared to these candles are the small. It also indicates that the candle, this spread, validate or indicate that is authenticate the volume bars. Authenticate, it means matching to each other. That is a basic concept to understand. All the things are based on these two things, validation and anomaly. That's why I'm concentration more on these validation and anomaly. Here, the price rising so much high in this spread, but volume did not rise. So there is something wrong. It means this candlestick movement and this bar movement not matching to each other. When not matching to each other, it indicates that that is an anomaly. That is abnormal something. In this bar, the bar falling so much, but the volume not increasing. The volume is so much little volume are below the average. When we see in the chart, we will find so much volume bars and so much candles. Then we compare these all volume candles and these volume bars and candles, then we can understand so much that this bar is showing that volume is low, not a high volume. When the bar is high, candle, this spread is high and volume is low, it indicating that there is an anomaly, that is a wrong something. When you find the wrong something, that is a signal that the next price can move down. It will not go, it will not carry on. Okay, it will move down. That is a signal that market will drop immediately, or in near future market will drop. In this big candle, the volume is not increasing. That is a sign that there is wrong something. The wrong is what? The wrong is anomaly between the price and the volume. In this, these are the narrow spread bars, are small bars, small candles, which volume is so much high from, if comparing to the previous volume bars. If the big candle have this type, if I draw, there is a big candle and the volume of the big candle is like that, and this small bar have a so much high volume, it indicates that there is something wrong. The wrong is indicating there is an anomaly. Also, same for this bar. So here we understand the difference between the candlestick and difference between the volume bars. When you find some mismatching, it indicates that there is something wrong. Or when you find all the things going correct, that is a continuation signal. Okay, here you understand the validation and anomaly of the candlestick. If there is any query in the validation and anomaly, then ask me, then I can continue the next topic. If there is any query, write me in the chat, or you can ask me live question about the validation and anomaly. Is it clear? Okay, so now we are going to the next topic. Okay, the next topic is that why, when the price increasing, why the volume is increasing, and what we can say, what is the rule behind that, then why price increasing and why volume is increasing, and what we can say that what is this and what is this. There is a one rule. The rule is that in the VSA, the rule is effort weighs result and cause weighs result and supply weighs demand. Okay, so effort is what? Effort is a volume. Effort is a volume. Always when I say about the effort is a volume in the period. Okay, I'm moving to the cause. So cause is what? When you find market was falling down and here market stop 5 to 10 minutes, it create a range. After creating the range, when we saw the market goes in up direction, so what was the cause? If the cause is right, then this market will move so much high. If there is a cause was wrong, then it will goes up and then again will goes down. So on the every video, on the every step, I am saying that without reason, price cannot move, or without reason, price cannot change the direction. So each and every move have a reason. So here in the market, when price falling down and creating a range, after range, when it create a breakout of the range, so there is the cause. So that is a cause. The cause was what? The cause was the buyer's volume was higher than the seller's volume. If these lower bars are the seller's volume and the highest bar are the buyer's volume, that is a cause that demand is more than the selling. So in the price action, you understood that what is supply and what is demand. But I'm clearing more here about the supply and demand. When the price, when the buyers want to buy on any price, that is a demand. When and in the supply and demand, always when someone is buying, there to be a seller also. When you go to the shop, when you buy something, there you will face the seller also. The shopkeeper is a seller. In the market, always when these type of entries you find, these type of contract you will find in the market. So in against the buyers, you will find the seller. In against the seller, you will find the buyer. These all things are creating a market. This market is based on the buyers and sellers. So when buyers demand is more than the seller's supply, then market will rise. When the seller's supply is more than the demand, then market will fall. So that is a rule of supply and demand. If the demand is high, then market will rise. If the supply is high, then market will fall. So what is the cause? The cause is that the demand is high. That's why market is going in up direction. Why market is going to fall? Because the supply is so much high. That's why market is falling down. We must understand in each wave, in each chart movement that supply is high or demand is high. Then how we can understand? We will understand this supply and demand with the help of these all volume bars. These volume bars will give us all the information about the market that the demand is increasing or supply is increasing. So the volume spread analysis give us information about the demand and supply. So market is running on the demand and supply. So that is the main information which we get from the volume. If volume increasing in the buyer's favor, it means the demand is high, the market will go so much high. But the supply is increasing, then market will fall. I'm repeating again and again because these topics are very basic topics in all the VSA analysis. And then effort. I repeat again. So effort is the volume, which units, which tick volume purchased in the specified this period. In this period, in this 1 minute, this volume is purchased. That purchasing is an effort from the buyers. That purchasing is an effort from the sellers. That purchasing from the buyers. Purchasing from the sellers. So sellers have an effort. So if effort is equal to the price is a result. That is a candle. And this is the result of this effort. So we can say the candle is a result and the effort is a volume bar. If effort is high, then result must be high. If the effort is less, then result must be less. If the effort is high and result is less, there is something wrong. There is anomaly. In this case, the effort is so much low, but the result is so much high. There is something wrong. In this candle, that is a result and that is the effort. If we are looking at the effort is so much less, but the result is high. It means in this bar, this is just an exhaustion. When we are talking on the price action, we find the term exhaustion. When sellers or buyer exhausted, they put all their effort in the one candle, and that candle, the body of the candle must be so much high. The spread so much high from the previous candles. That is the exhaustion. And that exhaustion we can understand from the volume. If the volume is not increasing but the price is increasing, that is the exhaustion. Exhaustion means the reversal. In the market, we will find the reversal. On the next candle, you will find the reversal. So here, you clear about the effort where's the result. So effort is volume and result is price. Okay, so there are some more rules. Okay, I'm going to clear those rules. And now we are talking. Yes, yes, brother.
I ask a question. Does the spread include the wicks, open and close, or it's just the?
Yes, we cannot. We can count the wicks, but in the trends. Okay. Now we are just counting the bodies. Okay. When we come to the next step, I will teach you about the wicks. Okay, if all the things I put together, then you will not understand. Okay, these are the critical things. I'm coming to the wicks. Okay.
Thank you.
Okay, so here now, the main thing is effort. So again and again, we are talking on the effort because all the VSA, we are analyzing the effort and the result. That is a spread, another spread, another spread, another spread. Okay, all the spread are same in the body. Okay, but here, if we are looking at the volume, so I'm creating the volume of these each and every candle. So look at this volume bars. These efforts is increasing, but the result is not increasing. Effort is increasing, result is not increasing. So you can understand this trend is a false trend. In near future, we will find the reversal. In some candles, when the candlestick reach the resistance level, you will find the reversal. So when you find these type of candles, in the volume you are looking at, here the price is increasing, this result is increasing, and volume, that effort is also increasing. So this movement is a true movement of the market. It will continue the trend because volume is increasing and effort is also, and price is also increasing. You just compare these two things. We are now talking on the multiple candles. Before we was talking on only one candle. Now we are talking on the multiple candles. In the multiple candles, now you can examine that if volume is increasing and price, these candles are increasing, that is a sign that market will continue more. In this case, market will reverse. And sometime you will find these type of candles. The result is increasing, okay? But in the few bars, volume was increasing, but now volume is decreasing. So that is a sign that you will find a reversal in near future. And after 1 to 2 candles, when these candlesticks reach on the support and resistance level, then you will find the reversal. So this concept what shows? This shows anomaly because result is high than the effort. Here, effort is high and result is also high. In this case, the effort is high, but result is not high. There is anomaly again. So this is an anomaly. It will not continue the trend. This movement will continue the trend. That is a validation. We can say that is a validation of the multiple bars. And same movement you can find in the downtrend. In the downward candles, you will find also these type of movements. So again and again, we are talking on the effort-based result because all the VSA strategy, all the VSA study is depend upon the effort-based result law. That is the law. This law is written by the Wyckoff. Wyckoff is the father of VSA study. Wyckoff written so many books on the VSA. Okay, so here, now you understand about the anomaly, about the validation of single candlestick and the anomaly and validation of the multiple bar candlestick. We will move to the chart, but before I want to clear your concept about the validation and anomaly, about the effort with result, these things that if you, before looking at the chart, if you clear these things, then you can understand the chart. Now is everything is clear here? So one thing I'm going to tell you, if you
Hello.
don't, yes, yes,
Yes, sir. I'm Sayed here.
yes, yes,
Actually,
Ayyan.
I wanted to know, sir, like in between this trend, if you find any bearish candle, so do we need to consider the same thing in the trend, or we need
Yes,
to change the trend? We need to change the
yes, Sayed, your
setup.
question is advanced. We are coming on these scenarios also. Okay,
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 all right, sir. Okay,
okay.
thank you, sir. Okay.
Okay, because we are just knowing on the basic things that in the uptrend, in the up candles, the result is increasing and effort is increasing. When the sellers interrupt between these trends, then we will identify what was that move, what will be that move, that we can understand how we can do when the one single red candlestick appear in the trend, then what will be the scenario. All the scenario will be changed. But in the market also sometimes you are finding 4 candles, 8 candles, 7 candles, 10 candles. Okay, so everything we will clear here. Just to reach on this topic, do you clear? Okay,
I'm okay.
about this 2 to
Yes, sir.
3
Yes, yes,
topics.
sir.
Okay,
Yes.
slowly I'm going. This is new thing. Okay, okay. So now, why these bars are going in up direction? The question is that why these bars are going in up direction? What is the concept? Why? What is the cause? If the market is going in up direction or the market is going in the down direction, what is the cause? Why market is going in up direction? So there is a question. We must understand this question. If we are not understand, then we cannot predict the trend. Here we must understand this concept. That concept is the supply and demand. Okay, so before in this trend there was the candles which are falling down, but in these candlestick, these red candlestick, we saw this type of weakness, this weakness shows that supply is end here. This weakness what shows? That supply of the sellers ends here. That is the cause buyers increase the demand and they rise the price. So what is the cause? Sellers are getting weak. That's why this trend is going up direction. Here the same situation. The sellers are getting weak when they are coming from the downside, from this area to this area. They are coming. They getting weak in this area. That was the cause. Supply was enough. Then when the supply was, there was no supply, then demand increased. Then buyers getting power to go in up direction. So that is a cause. It means when trend is going to change the direction, there is two things. The one is supply, the another is demand. Okay? The one is supply, the another is demand. In the price action, we learned that what is supply, what is demand. In the upswings, in the downswings, we can identify that there is a demand area, that is a supply area. But in the VSA concept, the words are changed. Instead of supply, we are using the distribution. Okay? Instead of demand, we are using the accumulation. In the price action, we are using the uptrend. If the price moving in this direction, we are using that is an uptrend. But in the VSA, we are using that is a markup. Okay? And when the price is moving down in the price action, we are saying that is a downtrend. But in the VSA, we are using markdown. The another name, markdown. Okay? So now here the four things again come. The distribution, accumulation, markup, markdown. So now first we clear these four things. These four things are very important. After these four things, all the concept, all the strategies, all the rules we will learn. Before the distribution, accumulation, markup and markdown, these four things must very important. Okay, here you understand about the effort-based result, anomaly and validation. Do you understand? It means, do you compare when I show you the candle and show you the volume bar, then you can decide that there is a validation or there is an anomaly. If anyone have a doubt, he can raise hand. Ask me. Okay, brothers. The question.
No, sir.
Yes. Yes, yes. Ask me, brother.
No questions, sir. It's clear.
Okay, it's clear. Okay, it's very
Yeah.
good. Okay, it's very good because I'm again, it's my habit that again and again I'm asking that if you are not clear, you ask me question. Okay, and the next day, if you say that, sir, what is validation? That I will be amazed that why you are asking about the validation. Okay, so here, one by one, I'm asking the question. It's very important because all the course is based on this. If you not understand, then you cannot answer the other things. Okay, Jeff, I want to ask from you. What is this? It's a volume bar or it's a spread?
The spread.
Okay, it's a spread. It's a narrow spread or it's a wide spread?
Wide spread.
Wide spread, very good. Okay, you know that is a wide spread. Okay, and then the narrow spread, if I say, it will be this type of narrow spread. Okay, as compared to the previous candle, that is a narrow spread, and that is a wide spread. Okay, if I combine the volume bar, that is a volume bar, is it validating?
Yes,
Okay,
it's validating.
okay. If I draw this volume bar with this narrow spread candle, is the effort whereas the result is validating?
No, it's not. Anomaly.
Okay, anomaly. Okay, good. So I draw some question. Do you understand this sign? That is a greater. Bearish effort is greater than the bearish result. So I'm asking from the Noor. Noor, do you hear me?
Yes, sir, I'm here.
Okay. Here I write down the statement. In this statement, I write bearish effort is greater than the bearish result. What's it mean? It means the spread is greater than the volume bar. Am I right?
Yes, sir, that's right.
Wow.
So the next one will be green.
Noor said, here I'm asking the question that the bearish effort is greater than the bearish result. And Noor said the spread will be.
That means no. The spread is the result. The spread is the result, and the effort is the volume. So the volume is bigger than the spread. And the next one, it will be.
No, I'm not asking the next question. I'm asking that if I want to draw the candle and the spread.
Okay. So the effort is the volume.
Okay, it means volume greater. Okay.
Yes.
So the volume bar must be greater, and the bearish result must be greater, or that must be smaller.
Must be greater also.
Okay, it must be greater. So anyone can tell me, is she right?
No.
No, sir, no.
No, sir. I mean, no. I understand.
So that statement shows bearish effort is greater. It means volume is greater. The spread is not greater. So it means we can draw this type of small narrow bar. Okay, narrow bar spread and volume is greater. That is the true answer.
Yes, that's true, but I don't understand your question.
Okay, now you understand? I think now everyone understand, because this VSA, all the study is depend on these type of